Hello, everyone, and welcome back to the Financial Wrap. Today, I'm starting a new series called Personal Finance, where I cover anything related to personal finance. I think it's an important topic to cover, especially today where so many people are struggling with this. And I also thought it would just be fun for me to have another series besides the weekly wrap that could come out kind of in the beginning of the week. So, a little bit of background. What I'm going to be doing in today's episode is sharing my top 3 winners in my own personal portfolio, and I'll also be sharing my bottom 3 losers of my portfolio. And I'll be going through and kind of explaining what my investment thesis was when I bought into these positions, what I'm thinking right now since the position has gone up or gone down. And at the end, I'll kind of summarize what I've learned so far in my investing journey. So I guess it'd be helpful to give a little context on that. I've been investing pretty seriously for myself since late 2018. I was a freshman in college at the time. It was my kind of the end of my first semester. I was inspired by one of my economics professors to start investing and kind of take hold of my own financial situation. I had pretty much nothing at the time. I had like $1,100 to my name, and so my portfolio was pretty small. Um, I graduated that college in 2022 and then began working. So I've been working for like the last 2 years. And so my portfolio has grown substantially through my own contributions and from the gains in that time since late 2018. And now we're in the middle of 2024. So it's been almost 6 years. And I've had some great investments. I've had some not so great investments, but I'm excited to kind of reflect on those today and share them with you all. And then, as additional context, the return numbers I'm going to be sharing are a little bit skewed because I've been dollar cost averaging into them for however many years since I've been in the position. So the gains might be a little bit smaller than you're expecting, and the losses might also be a little bit smaller than what you would expect. And also, I switched investment platforms about 2.5 years ago, and so I actually lost like the exact dates of when I bought some of these things. I do know like roughly when I bought into the ones where I don't have exact dates, but I don't think that's as important as the lessons and what you really take from the experience as an investor. So, without further ado, let's get into the episode. And I'd like to start on a high note with my biggest winners, and then we can kind of end on the losers and summarize what we learned from them. But let's start on a good note with the winners. So my first good investment, I would say, it was Bitcoin. Bitcoin's kind of this alternative asset. It's not a stock, even though I do hold lots of stocks. My portfolio is pretty heavy on equities at the moment, but Bitcoin has actually been one of my best investments. My conviction has grown exponentially over the years that I've held it and what I've learned from it. I actually bought Bitcoin early in 2018, but I ended up selling it and then bought back in late 2018. I don't remember the exact price. I want to say it was under $10,000, though. I want to say the first time I bought was like it was at like $8,000, but I did not buy a whole coin at that time. Unfortunately, I've been dollar cost averaging heavily into this position over the last 3 years, especially. And so my total gain is not capturing the entire gain from 2018 to now, but I'm just under 80%. I was over 100% return on my total investment before this most recent pullback from the all-time highs, but I'm really happy with my Bitcoin investment, and I also plan on holding this forever. This is something that I'll never sell, ever, ever. And if I do, it would be to buy a house or there'd have to be some kind of financial hardship for me to part with my Bitcoin other than buying real estate. And even then, I might not sell. I might just borrow against my Bitcoin. But really, the investment thesis here is it's really you're playing defense. I mean, you get a lot of people think of Bitcoin as offense to go get returns, but I kind of think of it from a defensive standpoint. I think Bitcoin is very defensive. It defends you against inflation. This is an asset that only has 21 million units that will ever be produced, um, and that can't be changed by anybody. You're protected against any kind of management team. There's no one person that controls the Bitcoin network. It's more or less controlled by the people who run the node software and the miners. So there isn't a single person that controls the network. It truly is a decentralized network. So you're protected against inflation. You're protected against stupidity at the management level because there is no management. You're also protected against governments, and there's a lot of different ways you can go with this. But let's say you are one of the 5 or 6 billion people that in the world that lives in a totalitarianism country. And let's say you do something to make that government unhappy with you. Even in Canada, we saw this with the trucker protests. They can freeze your bank accounts. They will freeze your bank accounts. None of the money in the bank or even on in a brokerage is yours. You're trusting someone else to hold it for you and that they'll give it back to you when you want it. And I don't trust that. I don't want to have all my money locked up with somebody else where I have to trust them to give it back to me. Bitcoin is a true bearer asset. I hold it myself. Only I can move it. I hold the private keys. And that's very appealing to me. That's something that I would like to hold, and I'd like to hold a lot of it. So I will be continuing to increase my Bitcoin position in the future, even though the price has gone up so much. I'm pretty price agnostic, honestly. The price could go to $200,000 tomorrow, and I'd still be buying at the same rate as I am right now. And on the flip side, the price could go down to $5,000 tomorrow. And not only would I keep buying at the rate I am right now, I would buy a lot more. I would figure out how to get more cash to buy more Bitcoin at that point. So this is something I've become really passionate about over the years. I won't go too much into a tangent on it, but yeah, this is something I'm going to be holding forever, and I wish I had bought more of in 2018, 2019, 2020 when I was in school. So let's move on to my second biggest winner. So this is an equity, which some of you, all of you, are going to be familiar with, Microsoft. And this was actually the second stock I ever purchased. The first was Apple, and then the second was Microsoft in late 2018. Apologies for not having the exact dates, but I do know it was in that late 2018 territory when I was really thinking about investing for the first time. Bought into a handful of different stocks. Microsoft was actually that second company I bought. I've never sold a single share of Microsoft. I've only dollar cost averaged over the last 5.5, 6 years. My total position is up 85.54% at the time of the recording. And my time horizon for this, I mean, ideally you'd like to hold it forever. But with a company, even with a company as dominant as Microsoft, there is going to be a day where this is something you're not going to want to invest in. Now, that day's not today, but I'd give it roughly 10 to 20 years, maybe more, until I would consider maybe liquidating some or all of my Microsoft position and putting it elsewhere. But I mean, there's so many factors that could go into that. You could have a different management team come in and just absolutely derail things. You could have something like AI reinvigorate the brand and the company and the balance sheet, which is kind of what's happening right now. So, I mean, you really never know. Bitcoin's kind of this forever investment for me. But with stocks, unless you're holding an ETF or like a fund of some kind, like if you're holding an individual stock, eventually you're gonna have to part ways with it, or your beneficiary is gonna have to part ways with it at some point. So again, the time for that we're not anywhere near that for Microsoft. At the time when I first bought into it in late 2018, I wasn't the greatest investor, especially as you'll see with my investments that haven't panned out so great. But I just knew that this was something that businesses used, like Microsoft Office. There really isn't even a competitor to Microsoft Office. Sheets is nowhere near Google's basically their version of Office is nowhere near Microsoft. And I just know from experience that it's pretty standard to have Microsoft Office in any job that you're in, especially if that's a data heavy field or job that you're in. But now we have this whole other angle that people are taking on Microsoft. They own a majority stake in OpenAI. They've been really involved in generative AI and integrating that into their Microsoft Office suite of tools. This company has a bigger net income, as does Apple, Nvidia, Google. These companies, they have bigger net incomes than the entire market cap of a lot of companies. So they have the most cash, not the most cash. Berkshire Hathaway has the most cash on the market. Apple has a lot of cash, but so does Microsoft. These are companies making ungodly amounts of money. They have a stranglehold in their market, and there isn't really a reason for them to give that up at this point. So Microsoft's something I'm going to be invested in. It's actually my biggest single stock position. A big reason for that is because it's my best performing single stock position. I'm going to continue to hold this for the long term, and I'm really confident in the short, medium, and long-term prospects of this company. My biggest winner that's currently in my portfolio was purchased initially on December 1st, 2023. I'd wished I'd bought more, but I didn't. This is, and it's MicroStrategy for those listening. This is a company I wish I'd bought a long time ago. Michael Saylor is the CEO of this company. I'd been looking at this one for a long time. I didn't pull the trigger. Even in the depths of the bear market, I was afraid to pull the trigger. I finally did at about $600 a share. I basically went all in on my position, and then I haven't really added to it. I've sprinkled in a little bit here and there, but it's really negligible compared to when I went in at around $600. It's currently trading around $1,400. At the time of the recording, I'm up a little over 100%. I got 102.45% when I wrote it down. My time position for this, as long as Michael Saylor is running the company, is forever. They have their own business strategy, kind of business running in the background, and that spits off cash flows to Michael Saylor, which he then uses to either sell stock or corporate debt that he then uses to buy unbelievable amounts of Bitcoin. I think he holds over 214,000 Bitcoin. He holds more Bitcoin than every other company publicly traded combined. He actually holds more than double the amount of Bitcoin than every other publicly traded company combined. And I don't think it will be possible for anyone to ever catch him. From an investment standpoint, the thesis here is that the Bitcoin per share is going to go up. And there's really nothing that could stop that. What do I mean by that? Let's say the price of MicroStrategy stock goes down. From an investment standpoint, you'll then be able to buy into the stock. Let's say it was because Bitcoin went down, or it actually went down a little bit when the ETFs came out, because people were selling MicroStrategy to buy the ETF. But if you believe in Bitcoin, which I'm assuming you do if you own this company, so I'll just give this from my perspective. If the price of MicroStrategy crashes and the ratio of MicroStrategy shares per Bitcoin is going down, then I'm going to buy more MicroStrategy shares because it's depreciated against the value of the treasury of the company, the Bitcoin treasury. If the price of the stock goes up, like it has in the last year, what Michael Saylor does is he leverages that by selling shares, buying Bitcoin, and while he's diluting the amount of shares that are tradable on the market, he's actually increasing the Bitcoin per share when he does this. So it's kind of this speculative attack on the U.S. dollar, where he's taking on debt at 2 to 3%. He's paying off the interest on those loans with the cash flow that he gets from his strategy business, and then he's buying Bitcoin and increasing the Bitcoin per share of the shareholder. Um, and he's been able to do this since he adopted the strategy in 2020. So this is something I wish I had bought earlier, especially with my conviction in Bitcoin. But I mean, at least I'm up over 100% in it. It's my biggest winner. I guess I said Microsoft was my biggest single stock winner, because I don't even really see this as a stock. I see this as something else, but it is a stock. So MicroStrategy actually would be my single biggest winner as far as the stock market goes, and I've held it for a lot less time than Microsoft and the other companies. So real quick before we get into the losers, what have I learned from the winners? One thing I noticed is I never regretted buying these companies. I never regretted, I might have regretted buying some of the losers, but I didn't really get the losers at great prices. Um, what I regret with these companies is not buying sooner or not buying enough. So I think if you have conviction in something, where I had conviction in these companies, just go for it. If you have conviction, it's backed by real data. Um, the financials are good in the company, there's good management, it's a solid asset like Bitcoin, then I do think that you should go for it, because the power of compound interest and your returns is going to beat the insidious inflation that we're competing against. All right, now for the fun part. We're going to go over my biggest losers. So, first company um, is Walt Disney. In hindsight, this wasn't a very good investment, but I just can't get myself to sell it at the price that it's at right now. So I initially bought into this back in 2019, and the thinking was this is a media empire. We're kind of going through this media transition. They had just launched Disney Plus, or announcing that they were going to be launching a streaming service at the time. And I made the ill-advised choice to buy in, thinking we were going to go through this big media transition. Disney would come out on top. To me, it didn't make sense why Netflix was worth more than Disney when Disney has all this content, all this IP, but they also have parks and experiences and all these things. I was like, well, Disney's cheap. I'll buy into Disney. That was kind of my thesis. Um, so far, I'm down 28.14% on my total position. I added a panic meter into my three losses to kind of like gauge where my panic is at. And I'll be honest, with Disney, my panic is pretty high for a few reasons. I know as investors, we're not supposed to feel panicked. We're supposed to be stoic and not listen to our emotions. And I mean, I haven't sold my Disney stock, so I haven't listened to the panic, but I am feeling panicked. And there's a few reasons. So the first being the really the succession plan is really poor. We saw that when Bob Iger initially stepped down and appointed Bob Chapek to be the new CEO. That didn't go well. The stock tanked. The Disney performance was not good. They're losing lots of money. And Bob Iger came back. The board fired Chapek. The shareholders fired Chapek. Bob Iger came back. And he kind of came back to right the ship. I think the stock's still down even since he came back. He said that he was going to find a successor. Still has not named a successor. So there's a lot of uncertainty regarding the management team, the vision. Where's Disney going? Where's Disney going to be in 10, 20 years? A lot of uncertainty surrounding that. And that is one reason why the price is down. Another more fundamental reason why the price is down is the financials, the earnings per share, net income, all that. That's gone down quite a bit in the last few years, and the main reason is because of Disney Plus. Disney Plus is losing a lot of money. They're burning billions of dollars on it every quarter. It is projected that Disney Plus will turn profitable here at near the end of the year, but it's basically been 4 years of just bleeding billions of dollars from Disney Plus. they could afford that because the parks are a cash cow. But you had this event in 2020 right after they had released Disney Plus, where we had COVID, all the parks shut down, they lost kind of their cash cow, and the combination of that and launching a business that's losing tens of billions of dollars a quarter really, really hurt the financials of this company. And that's something that they're not even close to being recovered from. And that's the main reason probably why the stock is where it's at right now. I mean, we're sitting right around 2013, 2014 price levels for Walt Disney. So it is a very, very beaten down stock. There's a lot of uncertainty around it, but I just can't get myself to sell. Especially at these prices, I'm not willing to sell. I'm not willing to sell my stake in Disney for this low of a price. So I am gonna hold on to it. How long is unsure. So I'm a Star Wars fan. I love sports. That's another reason why I bought into this company. I really saw the value proposition of the Disney Plus bundle. Um, but the Disney Plus bundle doesn't matter if you're gonna be pumping out bad content. So I'm not really a Marvel fan, so I can't really speak for Marvel and some of the other more kid franchises. But I am a huge Star Wars fan. I'm a diehard Star Wars fan, and Disney has just ripped my heart out with the Star Wars that they've been putting out. It's horrible. It doesn't feel like Star Wars. It derails the story. It's just not good. And it seems like they're just so focused on pumping out as many of these Star Wars shows and movies as they can to try and make money, but you can't just you can't just pump out shit. You can't do that. You're gonna lose your fan base. They're gonna turn on you, and you're gonna end up losing money because of that in the future. So, as far as like long-term prospects go, honestly, I'm not as confident in the future Disney base being as strong as it is now. Let's say in 20, 30 years, because of I mean, can you name a Disney classic that they've put out in the last 5 years? I mean, I guess like Inside Out would be like their only one, but I can't even think of like many like Disney classics. It's really pulling in the kids, that next generation of Disney consumers. I don't really see it. I know people are still obsessed with the parks, and that's where they make a lot of their money. But yeah, my panic in Disney is pretty high. I'm down 28.14%, but I'm not selling at these prices, and that's pretty much where I'm at with Disney. Next company, Block, formerly known as Square. So this is my second biggest loser. I'm down 37.71% in my position, and I initially bought back in late 2020. So where's my panic meter at before we get into this? My panic meter is extremely low. Not worried about this one really at all. So why is the stock down? Or I guess why is my position down so much? I got in at a bad price. This was a stock that was up multiple fold in 2020, especially coming out of the pandemic. It was a company I was able to understand, and it was a company that I felt like I was able to understand and that a lot of the other people wouldn't understand because of the Bitcoin aspect of this company. I do think that the lack of understanding and what Jack Dorsey is doing here at Block is part of the reason why Block's down so much. This is not like Disney. The financials of this company are improving every quarter, every year. Net income is, I want to say, like triple what it was back in 2020 when I bought into the position, but the stock's down and revenue's up. Every metric you want to look at with Block is up. The financials are strong. They're getting better. This is a company I believe in because of the Bitcoin aspect of it, but also this financial ecosystem that they're building. This is something I believe in. It's something I follow closely. I read all of their reports that come out, all their shareholder letters. I'm looking at the financials every quarter. So this is not something that just kind of slipped away from me. This is something that I have conviction in. And my mistake here was the price I bought in. I bought in at a really, really high price in 2020, and I'm paying for that now. I'm still down on the stock almost 4 years later. So I'm not panicked. I bought significantly more stock in this company, and I'll continue to buy stock in this company. it's one that I think is going to pay off for me in the future. I think we'll come back in a decade and Block could be in the biggest winners instead of the biggest losers. So this is one I suggest learning about. It's one of the few companies out there that is cheap, honestly, in my opinion. We have really stretched prices in the equity market right now, and this is something I would consider looking at, honestly, especially if you believe in Bitcoin. I mean, if you don't believe in Bitcoin, you're not going to understand it. You're not going to get it. Maybe you should start there first. But once you understand Bitcoin, if you're still interested in investing in equities, maybe this is something to take a look at. But I'm not worried about this one. The lesson here was the price you pay is extremely important. If not, it's as important, if not more important, than the company you're actually buying. All I can do is sigh before we get to this one. So this is my biggest loser in my own personal portfolio. I bought in April 2020. It was one of my biggest winners, turned into one of my biggest losers, and it's something I kind of struggle with. So for those listening, we're looking at ARKK. We're looking at Cathie Wood's ARK Invest flagship fund. I'm down 43.04% at the time of recording. I think my average cost is something like $70 something dollars. We'll say $75. It's somewhere in the 70s. I can't remember exactly where my average is, but it's somewhere in the $70 range. This is a fund that was trading at $160 a share. I was up over double in this investment at one point, and came crashing down. It was in a bubble. In hindsight, it was in a bubble. Let's just get into the few reasons here why I'm a little bit questionable, and why it's such a. This one hurts because there's some companies in here that I really believe in. Tesla, Block. There's a few others that she's bought into. Even Nvidia that she sold. But I really believe in her investment strategy. I believe in the way she looks at the world. She's truly an optimist. She believes in innovative technology. She thinks that these are going to change the way that we invest. She doesn't think that just piling into the S&P 500 fund and just adding to these magnificent 7 stocks is really going to pay off in the long term. And honestly, I believe her. I agree with her. The problem here has been her stock selection and her timing of trades. Some of the stocks that she buys, I just don't get it. They're losing money. A lot of these ARKG, not in this fund. There are a couple in this fund from ARKG, but I mean, it's just some of these biotech companies that are losing money and just, I mean, they're like, it's like gambling. You're gambling on a lot of these companies. And that just doesn't really fit with my investment style. Some of the companies she's invested in align perfectly. Some of them have turned out not really to align with what I invest in. She sold Nvidia in like March of 2023 or something like that. Like Nvidia was the poster child for what Cathie Wood preaches, yet she sold it before the exponential gains. I just don't get it sometimes with her. I don't like Zoom. That's one of her holdings. I don't like Teladoc. That's one of her holdings. I don't like Robinhood. That's one of her holdings. And so there's just some things here that I don't get. I'm no longer adding to this position. I'm no longer adding to Disney. I should have mentioned that. I am still adding to Block, but this is something that I'm also not willing to sell because of the price. And maybe I'm wrong. Maybe I'm being naive here. Maybe it goes lower. But there's still enough here to where at this price I'm not willing to sell. So maybe I'm the fool. But yeah, this one hurts. This one hurts. A combination of bad price and bad investment philosophies led to a 43% loss on my investment, which is that's tough to swallow, at least. But what have we learned overall here from the winners and the losers? I think one thing we can take is we have 3 winners here and we have 3 losers, but the winners' gains far, far, far outweigh the losers' losses. And that's just the way compound interest works. If you make 50% year over year in one stock and you do that for 10 years and you lose 50% a year for 10 years in another stock, and those are the only two stocks in your portfolio, you're going to have massive returns still because of the compounding effects of a stock going up. So hold on to the long term is a lesson. Don't panic. Don't trade off emotion is a lesson. But really, the biggest thing I took from this is the price you pay is, I mean, it should be obvious how important that is, but you can buy into something that you have conviction in that's a good company like Block. But if you're paying a bad price, that's something that is going to hurt your portfolio and the returns going forward in your portfolio. So I think I've become a much better investor since investing in these losers, especially. Um, but at the same time, you have to just hold. You have to just buy and hold. Let the winners run. Add to the winners. If you're losing conviction in a loser for a good reason, then maybe stop adding to it. Maybe don't panic sell, but maybe stop adding to it. Um, and I just hope that this helps other people kind of think through their own investments. So I'll wrap it up here. I won't ramble too long. Let me know what you think. If you're listening to this on Spotify and you want to see the slides, you can go to YouTube and watch the slides. If you're on YouTube, you can find us on Spotify, Apple Podcasts, Amazon Podcasts, pretty much anywhere you listen to podcasts, you can find the show. So be sure to give a follow and a listen. Be sure to subscribe on YouTube. Let me know what you think. Let me know if you want to see more of these personal finance episodes. And I'll be back this weekend with a weekly wrap. Thanks, everybody.